All right. Thank you, everyone, for joining us today um, in our continued series of our Forex 101 series. And today we are going to be talking about, continue to talk about candlestick reversal patterns. And over the past couple weeks, we have covered the shooting star and the hammer. Today, or week before that, we covered engulfing bullish and bearish engulfing patterns. And today we are going to talk about morning and evening star patterns. So we've basically moved from a 1 candlestick reversal pattern to a 2, and now we're looking at a 3 candlestick reversal patterns. And similar to our previous sessions, let's go into the details. The morning star, particularly, when we talk about the morning star, first we have to have a nice little impulse to the downside. So downtrend, bearish impulse. And ideally, we want to see the first candle of this 3 candle pattern, a relatively strong candle, ideally even stronger than the preceding candles on this downturn. And then the very next candle first will have to gap below the closing price of the previous candle. And again, when we talk about gap, so the opening price of the second candle differs from the closing price of the previous candle. And depending on your definition of gap, we are talking about either just a slight gap, or it has to gap even lower than the low. So if this candle here were to have a wick, ideally the further gaps even below that lowest price of the wick here, that's even a strong indication. So up until the opening of this candle, everything is going well for the bears, right? You're looking at a strong bearish downtrend, even with a very strong impulse encouraging the sellers even more. Okay, we're holding on to our position. And then what happens next in the second candle is that we ultimately form, at the end of the second candle session, we're forming a doji. In this case here, the doji we're referring to doesn't have, it closes basically at the same, the closing price is almost exactly the same as the opening price. So what that tells us is that there's an even balance between the buyers and the sellers. It's evenly matched, and we refer to that as indecision. The market doesn't know which way we're going. So we're coming from a strong bearish impulse, gapping even further down, indicating again, it's very strong selling pressure, and then the very next candle closes as a doji. So here we are already looking at, okay, the bulls finally have, the buyers have finally entered the market and have pushed back the momentum of the sellers. So now that we're going into the third candle, for it to be a valid morning star pattern, it has to be, again, almost an equally strong bullish impulse, a bullish candle. And what we're looking at here in particular is that the bullish candle closes above the Marabuzo line. Now, what is the Marabuzo line? The Japanese candlesticks were popularized basically in the Western market and technical analysis only in the 80s and 90s. And they were used previously, before that, of course, in Japan. And they have very vague, at times very vague interpretations. And the Marabuzo line is a similar vague interpretation. So it's roughly saying, okay, the 50% of this strong candle, so the halfway mark of this strong candle, is what is often seen as a very significant level. So for the morning star pattern to be valid, the third candle has to break and close above the halfway line of the first candle. All right, so that is very important. And Marabuzo lines, feel free to look that up as well. can be used in technical analysis quite frequently. Right? A lot of times these will form somewhat significant resistance and support patterns. So the fact that the third candle broke through this initial resistance line and closed above it is a strong indication that we're looking for continued trend now to the upside. Right? So for the morning star, looking for a downtrend, strong impulse on the first candle. Doji is the second candle, and the third candle breaks and closes above the halfway line, the Marabuzo line of the previous candle. In reverse, the evening star, here we're looking at a uptrend initially, right? So the bulls are in control, and the bulls are in control up until the second candle, where we here now have a doji indicating indecision. Right? So again, the second candle has to gap above the closing price of the previous candle, at least the closing price, ideally even the high. So if this one had to have a wick, ideally would gap even above that, and the second session would finish in a doji, with showing us indecision. The third candle here, breaking the Marabuzo line, which is the halfway line of the bullish candle, and closing below. Now the candle can of course close further than that. It can close even below the low of the first candle, but the Marabuzo line is our break, is our initial validation. Right? If it doesn't, it can break it, but if it doesn't close below, then this is not a valid evening star pattern. Mm-hmm. So this, in essence, is the evening star and the morning star. So let's look at a live market example, just so that we can see how we can apply this in real life market. Here we are looking at the 4-hour chart of the Euro-Yen pair, and we are looking at the morning star example right here. Now, when I was talking about last week, when we were talking about the engulfing candlestick patterns, we are also mentioning that a gap, and with technical analysis, it's not an exact science. And especially in the Forex markets and the lower time frames, we will hardly find gaps between the candles. So this is not necessarily, the gap is not a requirement that necessarily has to be met. What has to be met, however, is that we have a relatively strong first candle, followed by a doji here. Now, this particular doji has a long wick to the downside, admittedly, but it finishes, the closing price is basically the same as the opening price, and that's what we're looking at. And then the third candle here clearly pushes beyond the Marabuzo line of the first candle. Now, this is not as strong as a signal, but it comes at a significant turning point, so we'll still be considering this one. Candlestick reversal patterns, we oftentimes will look at them not as immediate trade entries. We're looking at them as a signal telling us, okay, the market may be turning, and then we're looking for confirmation. So what are some of the confirmations that would tell me this may be a significant signal? Well, for one, right here. All right, you see this? Here is the previous support level. Price pushed back up, and it comes back down to the same level, and we're forming a double bottom. Okay. So a double bottom is also another reversal pattern indicating that price will now start into bullish momentum. Right? So that's one. Are we looking at significant structure? Well, let's see. Drawing this horizontal line, it shows us, okay, price has come here before and reversed. So clearly, 1, 2, 3, 4 4 times price has come back here. So this is a strong indication, a confirmation for us. This may very well be a valid reversal pattern. A signal telling us, okay, price is likely to push higher. Further confirmation can be found then. So let's say we are at this time, in this particular candle, and as further candles open, how would you trade it? Well, you can wait for this high of the third candle to be broken. So we would be placing a buy stop and would put our sell stop below the low of the doji in this case, below basically the lowest point of this 3 candle pattern. Next set of confirmation is for someone who's rather conservative. What is the previous high? Because if we now are looking for a bullish trend to begin at this point, and we are trend continuation traders, and then we wait for this initial impulse to finish and wait for a retest around the previous high, around this structure. So the previous high is broken. We wait for the market to return to this level, and when we see that it will test and then go bullish, that's when we would enter our trade as a trend continuation trader. That's a rather conservative approach. Everyone has to identify their trade entries differently. Some would just basically place a buy stop here, and that would have been perfectly fine in this case. In this case, you would only experience a small drawdown before the market really picked up. Right? So if you look at in terms of ratio, what we're looking at here, so stop here, I would have looked for closest structure. Closest structure wouldn't have been a very good, it would have been 0.6, so next structure level would have been a better take profit area. So that's a much more favorable ratio, 1.6. Right, so that's if you were to just place a buy stop a couple pips above the high of the third candle, and your low, your stop loss is below the low of this pattern, you would have come out with a rather, yeah, you would have hit your target. So that's not a bad trade setup here. Again, you don't want to just go with one, just off of one signal. You want to pile confirmation upon confirmation. And in this case, we have looked at reversal signal, double bottom. Really, this price has come back 1, 2, 3, 4 times within about a month. So, and it has been rejected repeatedly at this particular level. All indications that this is very well can be a valid setup. All right.
Hey, Marcus, I have a quick question.
Shoot.
Once you are able to identify the candles the way that you gave the examples, do you always want to set like limits or stops, or is there a way that you can do like some type of market execution after you've watched the candles form with the evening or the morning star, and then you like pretty much wait on the candle after it closes below the the M line,
right? Right. Okay, so I personally prefer placing stops, buy stops, or sell stops, simply because this. Let's say here we're looking at our pattern here. Let me check this out. The pattern here completed. Right, so we have within a 12-hour period. Remember, this is a 4-hour chart, so each candle would represent 4 hours. So after 12 hours, this is finished. We don't want to enter immediately as this candle closes, because there are a lot of times. Ultimately, the whole name of the game of trading Forex is conservation of your money conservation, basically, right? And risk management. So the way to manage your risk is by waiting for confirmation before you're entering a trade. So you don't want to enter immediately. One of the ways to wait for confirmation is that if the market is to trend up, it will push past the high of your third candle, right? So you can set yourself, okay, you're watching the markets, you see, okay, we have a morning star pattern, it has formed, and I'm going to enter as soon as the market hits just above the high point, a few pips above. Look how long it took. It took 8 hours, give or take, right? So that is a long time to be watching the markets. And I personally, I just say, okay, this is a set and forget kind of placement. If the market doesn't push up here, fine. I'm not even going to be entered into the trade. I'll just delete my stop order, and that is it. Right? And as you can see, it's particularly this candle following the third candle of the morning star pattern initially seemed to push down. So at first you're like, oh gosh, now it's a false signal. Market's going to push down, and maybe you just look at a different chart and completely forget. Whereas then, just a candle later, it would have been a profitable signal, right? So that's why I personally prefer placing stop orders, just simply to put myself into this trade if it is a favorable, if market actually trends into that direction. All right. Well, that answer your question, Chandra?
Yes, sir, it did. I was trying to unmute. Yes, sir, it did. Thank you.
All right, perfect. Any other questions? This is a good time now to ask questions.
I think somebody had something in the chat.
Let me bring it up, see if it comes up. Okay, yeah, so best entry. I'm sorry, Mark had 2 questions. Let me see. We're looking for Marabusa line is once the next candle breaks below or above. Right, okay, so that I kind of covered that already. I hope. Again, best entry, I personally would, after I've done identifying that the signal here is in a very strong area, I would have just placed the buy stop a few pips above, and that would have been my best entry. I personally do that. Again, if you're more conservative, you wait for the trend to break the previous high, and then return and continue an uptrend on the retest. So you basically wait for the market to do this. So this is where we at now. When markets open, potentially this week, it may push back to retest this structure level. And then here we would then wait for some form of confirmation, a reversal pattern, weaker candles, and the market would go up. This may also be a very good entry. It depends, again. I can't give you a one-size-fits-all entry. Right? It depends on how, what kind of risk appetite you have and how you define your trades. I'm going to use this opportunity and recommend everyone, if you don't have a trading plan yet, write it out. Write exactly what you're going to do in what situation. Right? Define it. I see a morning star. Check. I check for confirmation. Entry, buy stop a few pips above, stop loss a few pips below, take profit near structure or at least 1-to-1. And you follow those steps every single time. That way you stay consistent and you don't change your approach. It is all about consistency. Okay, Elizabeth, if I always use the 4-hour time frame. Now, 4-hour time frame here is just where I saw this morning star pattern. I personally am more of a swing trader, so I would look at the daily. I would do a top-down analysis, looking at monthly, week, see what the major structure levels are. Right, so I would predefine major structure levels. Look at the weekly, see what the overall trend of the market is, and on the daily, I would then initially identify potential setups. So 4-hour time frame for me personally would likely be the execution time frame. If you're more of an intraday trader, you're looking at the hourly as your analysis, and the patterns appear in every time frame. But the lower, say anything smaller than the hourly or even 4 hour, those are less consistent, right? Because in the lower time frames, you're going to experience a lot of noise, a lot of volatility. That's why I personally prefer the longer time frames like daily and the 4 hourly. Yeah, but it depends on how much time you can invest. If you look at the high time frames, mostly if you especially like me still working, it allows um, for you to do everything else you can do. You just check your markets in the morning, in the evenings, in the afternoon, and in between you do what you need to do. You don't have to babysit your trades in the lower time as you would have to in the lower time frames. Okay, good questions though. Or if you want to unmute yourself, that is also totally fine. Let me see if I can find another setup.
Hey, what's up, bro?
Yeah, Mark.
Hey, just want to run through something again.
Sure.
The Morning Star, right?
Mm-hmm.
For the Persian Gulf, we are focusing on the second
Mm-hmm.
from the doji. I wanted to start to break up our bullish engulfing.
Right. Okay. So you basically be looking. You're right. So the third candle is definitely engulfs the doji. I absolutely agree. But it's not really considered an engulfing pattern because really for an engulfing pattern, you're looking for almost like an even match, right? So you're looking for a strong, relatively strong candle, this one, followed by an even stronger out. So if you have a doji and then the next candle, quote unquote, engulfs it, it's not really a strong signal, right?
Could you show me like an example on the chart?
Of an engulfing candlestick.
Yeah, of the bull.
All right, let me see if I can find something here as my chart loads up. I mean, this could almost qualify, right? Again, the gap is one of the requirements for an engulfing that are not necessarily have to be met within the Forex market because of the high liquidity and volatility. We see it's in a relatively in a retracement, but we are forming low lows. And then this candle here almost has no wick to the downside, indicating a very strong push to the downside, and then immediately followed by an engulfing, bullish engulfing. So that's what I would refer to as a bullish engulfing.
Okay, so we look for the candles that don't have the extra wicks.
You have to take everything into consideration, right? So this one here is a perfect example of what the Marabuza really stands for. The Marabuza would loosely translate as shaven heads, which you see no wick to either end. So this is a very strong impulse. For a bullish engulfing or bearish engulfing, the wicks and the length of the wick is not important. It's not all that important. It will tell a story, and you have to look at everything in context. But if this, for instance, were to have a long wick to the downside, relatively, and this one engulfs the entire wick and goes up to the top, I would still consider this an engulfing candlestick pattern.
Okay, great. All right, thanks a lot, man.
Yeah, you're welcome. Actually, as we are talking about this now, I also want to draw the attention to. So let's say we are looking at the Morningstar pattern, and we are looking at the initial impulse, and then the next one is our doji, right? Right, and then we have a strong push up. If this were to be combined in one candle, If you were to combine all these three candles in one, what would you have? Anyone who's been here with us or who knows their single candlestick patterns, if you know, if you see it, what do you have? Price pushing down, and then price immediately pushing up. Okay.
A doji on the higher time frame.
You would have, right, and a particular doji I'm looking for. It's also one of the important candlestick reversal patterns, right? So reversal is correct, but which one? One of that I would have mentioned at the beginning. I'm going to draw it for you. Anyone recognize this? Oops. Take the ring extension out. Anyone recognize this?
Oh, right.
Give or take, this one in the middle. So let's me. Right, a hammer. We're looking at a hammer.
I think it's called a kangaroo tail also.
Right, so kangaroo tail, right? Anyone who's read Trading in the Zone, it wouldn't let me line them up straight. But yes, a hammer or a kangaroo tail, absolutely. And so that is a morning star. If you combine these three, really, you're forming a hammer. So it's a downtrend and then a reversal at this particular spot, and then you're coming up to form the smaller body, having essentially having a long wick to the bottom. And the same would go for the evening star. You have a strong push up, reversal at a point, form basically this right here. This doji is our reversal point, and then an impulse down, and then we have a small body candle with a long wick, and this would be the shooting star in reverse. Right? So that's also how we can look at the morning star and the evening star patterns. Right? So we have less than 10 minutes, but any other questions? Let's run this out to the end. Let's see if we have.
You have one in the chat.
Did I miss one? Let me see. Absolutely. Okay, so our YouTube channel is Caribbean Blue FXTT, and I'll put it into the chat. All right, so that's where you can go back and you can look at the previous reversal candlestick, our basics. We've talked about structure levels, how to identify trend, and also the next series is going to start, or continue rather, next week with our very own Donnie Eccles. He's going to talk about the different harmonic patterns, a little bit more for advanced as well. And yes, I will be posting it there on our YouTube channel for sure. And so just look for Caribbean Blue FXTT and look for, check out our previous videos.
Thank you.
Absolutely, you're most welcome. All right, thanks everyone for joining. What I recommend you guys do, if you seriously want to work on candlestick reversal patterns, go through the markets, right? Check, see if you can find them, identify them, and then play out a scenario, how you would enter the trade, what confirmation levels be. Are you going to use Fibonacci retracement or extensions to further form a confirmation before you enter? However you want, but repetition is key. The more you practice this, the easier it would, and the more those patterns will stick out and jump out at you. Okay? Hope everyone has a good remaining Sunday afternoon, evening. Enjoy the sun if you have any. At least us here in the Caribbean, we love it. I'm not sure November in the East Coast is a little bit dreary. But thanks for joining, and have a blessed evening.
Thank you, Marcus.
Absolutely.